Welcome back, everyone. Got a great one today with Mike LaSalle, partner at Shamrock Capital. Mike, appreciate you hopping on, and congrats again on fund number 6, 1.6 billion. Exciting times over out in.
Thanks for having me. It's great to be on here with you, and yeah, we're excited. We're very fortunate to have the fundraise behind us, and now the hard work begins.
The hard part, and also the honeymoon phase. You can
Yeah,
just build. You don't have to be fundraising for all of us. I know it's quite the process. But so what's that look like? I mean, from a private equity firm, we're seeing a lot of different groups try to enter sports, and you're seeing these big announcements. Hey, we're raising this big fund, but it's like, are you really? How much do you have? This is legit. How do you guys, how do you approach that? How do you go do it? I think you guys are oversubscribed as well. And what does that look like just for outsiders so they understand the finance asset management world, we'll call it?
sure. Fundraising, there's a saying, the best time to fundraise is when you're not fundraising. And so I give a ton of credit to our team here in our investment relations group and other parts of Shamrock, because they were really laying the foundations for fundraising before you're actually in the market. So we were fortunate we weren't in the market that long. And that is largely because, a couple things, right? The LPs really want to know that you could deliver on the returns that you think you can. And they like to look at your track record. And fortunately, we've had a 20 plus year track record of just investing in media, entertainment, sports, and these areas. And so I think they said, hey, if we want exposure to these markets, these will be one of the guys that we think we should get that exposure with, because they have an expertise and a long track record and history doing it. That's helpful. That's what I say is table stakes, right? Like if they don't think you could produce the returns, the conversation's over. But then it's also, a lot of it's people you could trust, right? Because when you're committing to a private equity fund, you're committing 10 plus years of capital, and it's discretionary, right? And so, it's not like they could decide in a year later that they want to pull all their money from you. That's a different, like a hedge fund or a traditional public equity fund. It's a long-term commitment. So a lot of it's about trust and getting to know the people that they're backing, that they think that are going to invest this capital. And so that's where I think all that groundwork comes in before you're fundraising. If the first time you're meeting a limited partner or a potential limited partner is during a fundraising process, they are probably not a prospect for that fund. They may be a prospect for your next fund in 4 years, but they're not going to be a prospect there. So it's really about laying that groundwork, people seeing how you work, watching you invest, even if it's just getting updates from afar. And then when you're there, they're like, hey, we know these guys, we know this team, they're really smart, they know this industry.
Yeah, and on X especially, you see a lot of people give shit to VCs, PE, of like, oh, you're just like a bank, you deploy money. But you're building a firm too, and you've done it. You took it from the early days at Shamrock to what you guys are now. What are some of the similarities or differences you see between raising for a fund versus raising for a company, which ultimately is always cool of a private equity or VC, because you sit on both sides. You raise capital, but you also deploy capital. How do you approach it, or do you see it very similar?
Yeah, it's funny. I think a lot of private equity firms have this moment, right? Because you spend virtually all of your professional life thinking about how you're continuing to build and help your portfolio companies, the companies you invested in, grow, right? And you spend so much time there, and then you almost don't spend any time thinking about your own firm, right? You're like, oh, it's like 10 of us, we've got this, we're fine. And all of a sudden you wake up one day and you're like, oh, wait, there's an actual real business that is your firm. And there's HR issues, there's finance issues, not issues, but things that you have to proactively address that don't just happen naturally. And so I think a lot of private equity firms have that moment. There's like an inflection point where you go from a group of 5 people who are kind of just doing it to we're a grown-up company too. And you have to look at yourself in the mirror, and we say it all the time. It's like when we're talking about how to operate Shamrock, we're saying, what would we tell our portfolio companies at this point, right? Shamrock's got close to 70 people today. That's a real business that has real organizational momentum, real organizational things that you have to deal with and be proactive about. How do you maintain culture? How do you think about what's gotten you? How do you think about the values that have made you successful? But you don't become so anchored in the past that it stifles progress. But how do you not lose those values, right? And you're kind of always balancing how to do that and how to give the organization room to grow and evolve while still staying true to who you are. And it's fun. Like I'll tell you, out of all the deals and all the portfolio companies and successes we've had at Shamrock, I think one day when I have a retrospective on my career, I'll say that the firm and the deal that I am most proud of is Shamrock, not the company. But it takes a minute till you realize like, oh wait, we have a real company here. This isn't like in Shamrock, and we have to focus on that in the same way we focus on our portfolio.
That's awesome. And from an outside perspective, 70 people, what does a structure look like, right? People usually know how a company works, CEO, management team, blah, blah, blah. But a fund, I think a lot of people, there's just misconceptions. They don't even understand the whole structure. I think it'd be super helpful for the mix of, especially a lot of the founders on here.
Yeah, for sure. So what we have is we have a couple strategies within Shamrock, right? So we have the private equity strategy, which is the Fund 6 we were just talking about. And there's a strategy called Clover that we just raised Fund 1 alongside that's doing just same things as the private equity, as the growth fund, but just smaller equity checks. And that's the private equity strategy. And so that has professionals that are tasked with investing that capital, finding the deals, doing the deals, helping the companies grow. And we have a value creation team that's embedded in that group too. And those are just operators who are focused on helping the portfolio companies, once they're a portfolio company, with operationalizing the strategy. That's what we like to call it. So that's one group. We also have a content platform, which is one of the most active acquirers of catalog content. So they're buying film, television, movies, any type of royalty streams around catalogs of content. That's a whole team. They're finding the deals, they're analyzing the cash flows and managing those too. So those are two separate, we all work together, but we have dedicated people that are investing those funds. In addition to those groups, they have a value creation team too that's creating value for the assets that they wind up acquiring on the content side. We have investor relations, which is a team group with making sure our LPs get what they need, helping think about fundraising, and really thinking about the outward facing look of Shamrock. And we have an entire finance team, which is not small, not de minimis at all. That's helping manage all the funds, all the operations, the cash flows, the ins and outs. General counsel. We also have a head of talent, which is thinking not only about talent of growing and developing people at Shamrock, but they are also thinking about the portfolio companies and what the talent is at the portfolio companies. So you have that kind of amalgamation of people that are all working together under the North Star of how we're producing better returns for our investors. And then at the governance level, we have an executive committee, which is really tasked with day-to-day operations of the firm. And that's meant to be like get people out of their deal and their fun stuff and to be thinking about the firm.
Yeah, it's like we mentioned, there's a lot that goes into it, especially as you get bigger, and taxes. I don't know if we mentioned that even in there, but that's a whole nother ballgame.
Finance, right? That's part of that finance team. That's not a small.
And you mentioned the content. Taylor Swift, is that you guys the ones that own that? Is that correct?
We are. Yeah.
So I guess it shifts us back a little bit, but how's the strategy even evolved over time, right? Media, entertainment, sports, you're calling it, right? There's a million things we all know that can go. But I'm sure you have a bunch of other stuff listed, but like, how do you think through that? Why are you still bullish on it? Just sort of the rundown of that.
In general, I mean, if you look at the stats, right? It used to be 10 years ago, we used to say there's only one thing people do more than consume some sort of content, media, entertainment, social, and that was sleep. That number has flopped. Actually, there's nothing people do more. They do it more than they sleep. That's because and some of that is because they're doing it, they're watching TV and doing something at the same time, double counting that, but still, hours consumed of content in some way, shape, or form is more than any other task, any other item that people do during their day.
It's crazy.
If you use that as a fundamental basis, right, for what people are doing, that's why we remain bullish on what it is. Now, what we love about these industries is if you use that as your North Star, you say like, okay, there's a lot of stuff happening, and that's where we think there's opportunity, right? There is a lot of disruption happening underneath that big trend. And therefore, you can't be a casual investor in media, entertainment, and sports, because from a relationship point of view, or just even a knowledge of what's happening underneath all these trends and these themes, you're going to miss something. I'm passionate about these industries. I love them. I think about them 24/7. And I still always think I'm 3 months behind because there's so much happening. And that's why we think there's real opportunity to produce really nice returns, is because it's never status quo here. We don't have to be bleeding edge, but you have to be able to be thinking about, where are these big picture themes going? How do you take advantage of those? And sometimes what we like to do is we do it in the non-obvious way. I always call it the first derivative or the second derivative of the theme, right? So how do you take advantage of something that's happening? And there's the obvious play, and that play may get super hyped type multiples and valuations. But what is the first derivative off that, or the second derivative off that, that really takes advantage of those same trends that may not be getting the hype, but you still ride that wave? That's really where I think Shamrock has, and where we've been able to be successful, is thinking about those first and second derivatives.
Yeah. Now I love that explanation. Now give us some examples of that, like, or give us one that has followed that portfolio company.
Yeah, sure. I'll give you one in the sense of, there's a company we used to be an investor in called RB Media. And RB Media was the largest publisher of audiobooks. Doesn't sound that sexy, right? Doesn't sound that, right? Like audiobooks. And this is like back in mid 20 teens, right? So it's not today. Thematically at that point, we were talking about what audio means in the marketplace. And you got to remember, you got to rewind and think about, this was the dawn of Alexa, right? That smart speaker was just coming out. You're still in the first decade of a smartphone at that point too. And audio is taking a different play. It doesn't mean that you have to carry around CDs everywhere. It doesn't mean you have to carry around cassette tapes. I'll date myself, right? Or any of that type of stuff. People were interacting with audio and consuming audio in a different way. So the hype story there, in the best way, and it's a great company, is something like Spotify, right? Like that's the way, like, okay, people are consuming audio and thinking about audio in different ways. That was great for venture capitalists. They made a ton of money, and that works. That's not what we do or the risk that we're underwriting. We're thinking about, what is the dawn of the smart speaker? What is this going to do? People are going to start consuming audio in a different way. People are going to interact with audio in a different way. And so we started to look at what is audio. There's music, that's first level, but there's podcasts, there's audiobooks, and all of these other ways that people are interacting with things while they're cooking now, because it's just, hey, Alexa, turn on this book. Hey, Alexa, do this. Or on their smartphone, and they're commuting, and they're walking to work in New York City with their AirPods in and listening to content. And so that was kind of that next level of saying, hey, we really think this was kind of an old school business where people are listening to it on CDs in a really clunky fashion. This trend over here is going to have an effect on this business. And we grew it and really created a full audio platform where we owned the content, we distributed some of the content, we did it for libraries so libraries could evolve, and kind of created this platform that was, people didn't know the brand of, but we were really important in that ecosystem.
Yeah, super interesting. And as you were going through that, I'm just curious, like, as you're looking through the current tech stack and everything happening, what are some of those things on the next wave you're trying to get ahead of, right? You have new influx of capital. Obviously, I don't know what a timeline is on a PE fund, 2-3 years. You probably raise it on some of these opportunities. Where are some of the areas you're looking now that are like audiobooks back in 2010 or whatever?
Yeah, I think some of the things that we love right now, just big picture themes. And, the nice thing about these industries is, in my 20 plus years of doing this, is that the themes we were talking about 15, 20 years ago are very different, or they even seem quaint now compared to like where they are. So these evolve. And over the course of the fund, they will evolve too. We've been big believers in talent and the power of talent among all of us. So how does talent play, whether you're talking in sports, whether you're talking in traditional Hollywood, creators, whether you're talking about producers, you're talking about executive talent, whatever it is, right? There's the tech platforms, there's technology, there's the distribution platforms, and all this stuff that have had a ton of power for 100 plus years. And we think talent is going to continue to have more and more power economically and from an influence point of view, because that's really what it is. They are the storytellers, no matter how you think about the story. And when you think generationally, my kids are fans of the talent, not the teams anymore, when you think about sports. And that's a change, right? Like, I grew up a diehard Cubs fan. I will always be a Cubs fan. I don't know that my kids are going to grow up being a team fan versus they love LeBron, whatever it is, they love Mahomes. And I think that's one piece of the power of talent. The second piece of the power of talent is talent now doesn't need their kind of on-field play or their platform, if you're talking about different outside of sports, to reach their fans. They can do it directly. They can interact and engage with them directly, which just gives them even more power. And then the third piece, they could use that engagement to enhance their brand and create other brands around that and build themselves outside of their on-field play, their on-court play, or their on-screen play, or whatever they're doing. Again, it doesn't have to be sports in Hollywood. I think just talent in general and the storyteller of that talent is going to continue to rise, even if you see platforms go up and down, up and down. And you see it. TikTok, right? Like the ultimate democratization of creation, right? Talent rules. And so I think that's a huge kind of tectonic theme that we talk about, is how do we continually play what we think the power of talent is going to be going forward.
Yeah, it's super cool as you go through it, because you don't mention any company names, but as I think through your portfolio, like it all starts to make sense in one scoop of like, okay, you have Excel on the agency side, then you have Religion of Sports on the documentary, and so it's like this influx of, you're calling it talent, I'll call it eyeballs, you're calling it platform, I'll call it distribution, whatever you want to call it, but it's really interesting and cool, like as you're painting it to sort of piece it together. Now, I think a misconception maybe just around the space of private equity in general is you're taking these big stakes with the intention to sell. But what's the timeline, right? How do you look through these things? How do you get to exit? Is it IPOs, secondaries? Is this changing? And what's the state of now coming into things, and then also being able to generate a return but make real impact at the same time?
Yeah, I mean, I think our timeline is probably pretty similar, right? We've held companies for as little as 2 years, and that's not because we were flipping it. I always like to say I like to accuse from my management teams. And when the management team says, hey, we just achieved what we thought we were going to achieve in 5 years, in 2 years, I think it may be time to start. We've got all these inbound interests coming in. Like, should we talk about it? And it's like, okay, let's talk about it. And we've held companies for 8+ years, and because it wasn't ready. And like a great example of that was the Harlem Globetrotters. We were investors in the Harlem Globetrotters, and I think we invested in 2005, and we wound up selling in like 2012 or 2013. Don't quote me on that, but so like directionally, right? And it was a great business that we were growing very incrementally, and it produced a nice amount of cash flow. And we kind of said, we're fine. The management team and Shamrock said, we're fine until like the right buyer comes along that we believed we were just stewards of this storied brand. We also didn't want it to be in the wrong hands because of, I think, the Harlem Globetrotters have a unique place in America as what it means. And so we waited for the right buyer at the right time, and we were fine holding that for 8 years. So I think it's very depends on the situation. I think as for type of exit, we've typically probably been more of a seller than an IPO type. We've taken a few companies public. We're happy to do that if that's the right answer for that company. It's a complicated, long process, and you have to have a management team that's wanting to do that, right? Being a public company CEO or public company management team, I think sounds really good when you don't get into the details of what it really means. And then when you get into the details of what it really means, it sounds less good. keep it at that, right? And so you have to have a management team that's ready, that wants that, and that you think this company can endure. Because when we take it public, that's not, be clear, that's not a sale for us, right? We're still in it until we're selling down. Could be 6 months, could be 2 years, right? So we need to make sure that we think that company can succeed in that environment. I think you're seeing the dawn in private equity of a lot of continuation vehicles also, which is kind of new. Shamrock has not done one of those to date. But that's a situation where you effectively say, we really like this business. It's ready for its next stage. You actually raise outside capital outside your fund that buys it from your fund, and then you continue to manage it for that outside capital. TPG did that with CAA. So the ultimate sale to that they just did was actually the continuation vehicle sale, because they had already sold it through the continuation vehicles. That's an example in our industry, but that's happening throughout private equity. It's something we haven't done yet, but I think that's kind of what I would say is the evolution of the exit in private equity, where 5 years ago that didn't really exist.
Yeah, interesting.
From my point of view, you build a good company, growing, good management team, all that stuff, and the exit takes care of itself. Like that, if we're doing our job, the exit takes care of itself. But we typically like to see a strategic sale or a sale to a bigger private equity firm.
Got it. Now, I know you touched on a few of the trends there from I'll just call out a few, just maybe paint the picture a little bit too. But in sports, right, we're seeing a lot of these, won't name names, but minority stake team owners coming in, just a lot of influx on that side. I think the early stage space is drying up a lot, just knowing some of what's going behind the scenes there. A lot of the accelerators, even a lot, like everything's sort of flushed out, leaving a big hole. And then just in general, the IPO market's been really slow across everything. Any sort of insights just on the whole state of equity market, private equity market as a whole, and relating it more a little bit to sports, media, entertainment.
Yeah, I think on the sports side is interesting, right? Because sports has become popular in private equity. It's I'm trying to not use the word trendy, but I'll use it. It's become trendy, and we've been investors in sports, like I said, for a long time, between Globetrotters, Learfield, FanDuel, et cetera, and we've loved it. It's an interesting marketplace. I think you touched on the early stage stuff. The tricky part about some of the early stage sports stuff is if you're an early stage company that's trying to serve professional sports, there's always a TAM issue. Meaning, okay, this is amazing. You've got this great tool or whatever, and all the NFL teams want it. And you're like, okay, wow, that sounds really good. That must be great, right? Okay, that's 32 customers. Now what? Right? And you're like, okay, well, all the big colleges are going to do it. Okay, so now you have 50 more customers, right? You start to think like your contract value or your value per customer needs to be really high, because the TAM, unless you're going masses to youth or something like that, if you're serving professional, the TAM becomes limited. And I think that's what people have realized when they've when they've gone a layer deeper and got off like, wow, this is really cool. The entire NBA wants to use us. And it's like, well, now what is the moment? So I think youth is starting to see its moment. And I think you're seeing that because people see like there's a ton of interest in youth and there's a huge market, and you have parents that are willing to spend whatever it is around the sport. Yeah. So I think that's an interesting area that you're seeing a ton of interest in, that I think you're going to continue to see.
Does that interest you? Does that interest Shamrock you?
Yes. I love, it's trying to find the right play. It's hyper fragmented. But I think there's a bunch of interesting areas around the event side, around the club side, meeting travel clubs and stuff. I think there's a lot of really interesting plays around youth sports and youth sports platforms that I think that just tap into a lot of different themes that are interesting, such as live and experiential. Again, parents unlimited. Well, a lot of parents will just, no matter what their financial situation is, are always willing to pay more for their kids to get an edge in their sports. And so I think there's a lot of interesting themes there around youth that could see another boom. I think on the minority stakes within teams, listen, I think that's really interesting way to invest. You're kind of playing on a bunch of different things. For Shamrock, it's not, purely because when I look at it, my LPs have given us, invested in Shamrock to not do like, hey, guess what? Here's a passive interest in a passive minority interest where I have no rights and I have no say, and they actually don't really want me in the room. They just kind of want my money. But trust me, it's going to be great at the end. And it probably will. It will be. It's not a doubt of whether it's a good investment or bad investment. I'm not here to judge that. I'm just saying mechanically, for me to go to my investors and say like, that's what I'm doing, I think they'd look at me like, well, that's not why I gave you. I want you to be like actually having an impact and helping these companies. So
Yeah.
I think if you're raising a pool of capital to go do that, I think that's great. And it's a certain pool of capital. We have kind of taken the position that from our private equity pool of capital that they've given us, that's probably not the right way. And we'll do a first derivative, second derivative of sports. Something like Excel is a great way to play a lot of those same trends that we mentioned.
I agree. Yeah. And on what's interesting, like going to youth, it's because it's like this commercial and then you can actually get to consumer. And if you look at even, I'm sure a lot of your investments or even a lot of the VCs in sports that have done the best, it's very much a consumer angle. You use sports. I call it sports as a wedge. I know some people call it like sports as a platform to scale, but it's how do you go from commercial or create this halo effect and then use that to get into military or whatever it is, right?
That's right.
Which is interesting. Now, I don't want to go there. That'll take us down too long of a path. But anyway, I was just going to go sort of on the team. It's a little bit more like it's like a bank. There are a lot of them that seem to be like 20-year funds actually. But anyway, we won't go there. I guess we'll go here just with a few minutes left. Advice for anyone looking to. I get a lot of inbound from people trying to enter into sports, particularly onto the private equity space side. Any advice for ways to stand out or make a name for yourself around that? As like you said, it's fortunately but unfortunately a little bit trendy right now. So there's a lot of interest.
I mean, one, I think in anything, which is probably not the advice everyone wants to hear, is never discount fortune and luck as part of your career path, right? And I think my first piece of advice is anybody who you're talking to as a mentor or anything that attributes all of their success to their own talent and not to a significant part of fortune and luck, run for the hills from that person, right? And so you have to put yourself in position to where when opportunity and luck presents itself that you can take advantage of it. So I think that's that's my first kind of piece of advice. And then, so how do you do that? How do you position yourself in that way? And I think from a sports point of view, specifically, it's a small clubby industry, right? And that's just the reality of it. And so if you want to be private equity, the traditional way into private equity is always going to be through the traditional investment banking because you get the training, the financial training, maybe some consulting and stuff like that. But I would still say do that because I think that is just core business fundamentals. It's not about sports. It's about learning the core business fundamentals that you learn in those traditional routes. And you get your crap beat out of you for 2 or 3 years, but it's an invaluable experience. That kind of tees you up for private equity, right? And then specifically within sports entertainment is you want to be looking and talking and thinking about within those TMT groups. So you're interacting with people in those industries and networking. The most important thing, especially in sports is an industry where people do business with people who they know and who they like. It is probably more so than any other industry, I would say, that I've ever encountered. And so you have to be figuring out how you're in the room with those people. And when you're 25 years old, not anything against being 25, but I remember when I was 25, right? I didn't have a vast amount of experience thinking about anything. I probably thought I did, but I didn't, right? You don't have to be in the room with, you don't have to be in the room with Robert Kraft, right? What you need to be in the room with and networking, getting to know is the 25-year-old who's at the Patriots, the 25-year-old, your peer at these organizations, in the media companies, the sports betting companies, the teams, the leagues, and you get to know and be, whether it's through being in the TMT group at your investment bank or in the management consulting group or whatever it is that you're doing, if you're an accountant, whatever, but you're getting in a room with your peers because then you're developing relationships, go to dinner. And then 10 years from now, those people are going to be as influential. And suddenly you're part of that. You're part of that group that's known and trusted. And it takes a minute, but I think that's part of the biggest thing about developing those relationships. Don't worry when you're 25 or 28, whatever, that you're not in the room with Mark Cuban yet. It's great if you can be, but it's okay. Be in the room with your peers who you're going to grow up with. And all of a sudden you're going to wake up and be like, oh, wait, all of my friends in my network are people who are running things now or have real influence now. And I'm part of that. I'm part of that trusted group. I think that is the most important thing. And nobody likes to be patient. No one likes to think in 10-year increments and stuff like that today. But I think that is really important to like gain experience, sponge it up, and continue to network within your peer group, because all of a sudden you are going to become part of that trusted group. That is, I think, more so than anything else, the most important thing.
Yeah. A lot of good points in there. It was funny. I had a bullet point jotted down. I didn't bring it up, but I was going to say, like, to your success even earlier of just on the Portco side, would you attribute any of that, or how much to luck would you attribute that? So when you brought that up at the beginning, it just kind of made me laugh. Of you were like already thinking about, yeah, there was probably, which is cool. And I think anyone that does well in anything always says luck was a part of it. But it's like, can you increase your surface area? I guess that's the biggest thing. Increase your surface area.
That's right. I always say we could do this, and we'd have to do this off air, if you will. But I could give you the 5 reasons we should have never done every deal we've done.
Well, we're doing that right
always
after.
A reason not to do it. What's that?
I said, I want to hear this right after. Sorry, everyone else.
Oh, yeah. There's always a reason not to do that, a deal, right? Or something. Sometimes it's because you thought through the risks properly, and sometimes it's good fortune.
Yeah. So last thing, what excites you going into 2025? What's got you ready to roll into the next? Damn, time's flying. The next one.
Yeah, that's a good question. I think 2025 is going to be an interesting year overall. Like I like to start like big and kind of go down into more macro to micro, right? And I think 2025 is going to be really interesting macro. We obviously have a massive shift in, I think, what our political and our government infrastructure is going to look like. Not me judging whether that's good or bad. It's just going to be different, and it's going to feel different. And so I think that is going to be one piece of it. I think we also have the global issues, which are not going to be de minimis either, both related to the previous mentioned point, but also unrelated to that. So I think you have a little bit of both of those on the macro that are going to have an effect. I do think, though, there's feeling, and again, this could change in a minute with something happening, out an extraneous item happening, but there's a feeling that people are starting to buy risk again, meaning like there's a little bit of a risk on starting to come into the environment, which I think it's been risk off for quite a few years now. And people are starting to think about growth, not survival, growth, and starting to think about like, what are the interesting plays here? And I think that is exciting, because that means people are kind of coming at things in a different mindset. And so I think that's really exciting on the, again, thinking macro, going one level deeper into media, entertainment, sports. I think it's really exciting too. Entertainment and media industry have gone through a massive change. Streaming has obviously been a huge disruptor. I don't think it was well thought out by a lot of the large companies as to kind of what it was going to do. And I think the last few years we've been dealing with the backlash of what they actually did, that blowing up their own business models. And I think we're starting to feel like they're coming through that also and kind of getting their feet under them. I think there'll be some consolidation that's going to happen. That's also going to help that hasn't happened, because I think there's been some structural issues with the consolidation. I think within sports, you're going to continue to see the trend that because of all the stuff that's happened in entertainment, that sports is still, although people think it's crazy what the media values are that sports is getting, the reason why is because it's the only game in town to be able to amass an audience at scale and in a timely manner. Right? That's the second piece, right? Netflix can talk about how many people watch the next Stranger Things, but they can't do it on a timely manner. sports is the only thing left, right? There's no Thursday night television left where everyone's watching, again, I'll date myself, Seinfeld or Friends on a Thursday night where they know they could do that. Sports is it. And that's why. So despite sports getting these crazy media values, it's become more and more valuable because if you're an advertiser or brand that needs to reach people or any type of messaging in a scale and in a timely manner, sports is the only game in town. So I think sports is still going to ride a really nice wave, continue because of its position. And I think the last piece is, I think you're going to continue 2025 and 2026. I think the story of sports is not going to be, yes, you're going to hear stories about someone bought a minority stake and someone bought a minority stake. But I think the real story is going to be, these are going to be the foundational times for what college sports becomes for the next 10 years. And I think that's the piece of sports that's in the biggest flux. College is going to be wild. And settlement in April, if that gets approved, et cetera, there's going to be a lot of change and things happening. And I think 2025 is going to be like the seeds. We'll look back at 2024 and 25 at college.
Yeah, fun year. Yeah, fun year on a lot of fronts. And I think there has to be a collective consciousness or something, because the feel, like, I think if you're tapped into it, I think we all feel like this, Matt, like I agree with all that. It's like you feel it. It's really interesting how that works.
Yeah, it is funny how, even though nobody's connected, like everybody's connected, right? And how they feel and think and talk.
Maybe through here, they're already got something, who knows? But yeah, Mike, I appreciate you coming on. What's a website? Where can people learn more? Just stay up to date on what you guys are doing, and reach out if they're, build a really good company or looking to work for a great firm.
Yeah. ShamrockCap.com is our main website. On there, you can see our bios and, reach out. I'm always happy to chat and interesting ideas and thoughts. And my pleasure. Is a great conversation as always with you, and love to be on. So
appreciate it, Mike. Awesome.